This is the inverted yield curve from 1982 to 2021. And in the past, I've looked at what the inverted yield curve percent was at when the stock market was at its bottom after a crash. Now, I've looked at 2009 and 2002 in the past, but this time in this video, I wanted to add 1982 and 1987 because I haven't covered that yet. In 1982, when we reached the bottom after a 28% drop, the inverted yield curve was at 3.11. And that's slightly higher than what we had in 2008 when it was at 2.76. And then in 1987, you can see this really interests me because the very top of the 10-year minus the 3-month, that was the bottom of the market in 1987. There was a 30% drop in the market, and the yield curve was at 3.57. So that was the bottom of the market right there. And then we move on to September 2002. After the dot-com bubble in September, we reached the bottom of the market, and that was 2.06. Now you can see the 2.06 in the light green. That's somewhat in the middle of the screen. And then we moved on to 2009, where we were at 2.76. So all these have in common, they're at least above 2 on the yield curve. In 2002, the yield curve was at 2.06, so that was slightly above 2. And then in the orange for the housing crash, we dropped 50%, and that was the 2.76 I talked about earlier. So in my view, this can kind of indicate the range that we were working in. It's basically 2.06 to 3.57 that the yield curve was at when we reached the bottom of the market. And the average, you can see 2.76 in orange for the housing crash is kind of in the center. So there were some smaller crashes that occurred beyond that, but of these four, the average is 2.875, and that's pretty much 2 7/8. So that's one way of thinking about it. But for the smaller crashes, we had one in 1984 that was a 15% drop, and the yield curve was at 1.92. So slightly below 2, but it was only a 15% drop. And all these numbers for the percent drop, I'm basing it off the Dow Jones. And then in October 1990, we dropped 17%, so not quite as much, but we were at 1.20, just above 1. And in March 2020, which was fairly recent, the Dow Jones dropped 23%, and the yield curve was at 0.59. But I'm not positive that was the full cycle of the crash. I think we got propped up slightly. But I do think this puts into context the effects the yield, the 10-year can have on the market. As rates go up, it could, once it reaches the top, it tends to indicate that we are nearing the bottom of the market, at least according to these four. But I thought this would help bring some things into context, adding 1982 and 1987 into the picture. And thanks for watching.